There we go. Okay, so good evening. This is Ken at Tortoise Capital. This is a daily debriefing and strategy review for March 2nd, 2020, 8 p.m. Thanks to the guys, short notice, were able to come in. So I had a question first. I just want to cover first things first. So Trader Barry said, hey, I had a go at the SWOT exercise, strengths, weaknesses, opportunities, and threats exercise that I distributed last week. Any chance you could speak a bit in your next webinar on how to formulate the strategies for each of the 4 combinations on the slide? Thanks. So I'm going to go through the strategy guidance here in a second, but first, just so you, as a quick review of where we are with the strategy, the SWOT analysis. All right, so this is Barry's kind of background, culture, and goals. He's gone through and itemized his strengths and weaknesses. So the left-hand side, these 2 sectors over here, let me, hold on, let's see, insert. So these 2 sectors over here are the result of an internal assessment that he's done on strengths and weaknesses. And then there's an external environmental assessment that you do where you take a look at the opportunities to win and then threats to your success. And those could be active or passive, either like environmental threats or direct competitors. And so category 1, priority 1, is where you look to put your strengths on environmental opportunities in order to achieve wins. So category 1 are ways to achieve big wins. Category 2 is the next thing you take care of, and that is, how do I ensure that the threats do not exploit my weaknesses and cause me to fail fast? So I want to avoid disaster. Think of it as insurance over in here. Prevent disasters from the environmental threats. Category 3 are, how can I seize opportunities to improve my own weaknesses regardless of the threats? But when I look internally and I see things that I don't like or I feel are weak, what can I do that are low cost, high payoff, easy to perform, that can improve some of these weaknesses? So even in the future, if an environmental threat appears, well, I've already taken care of it by strengthening my weakness. And then category 4 is something where the threat is so strong that no combination of avoidance or internal improvements can prevent the environment from getting a grip on me. And so I have to think about putting my strengths to divert them from the win to defeat the environment's opportunity to win. So those are 4 different distinct categories of strategy. So Barry's done that, and so he asked for some guidance. What I'm going to do is give him guidance to get started on the most important area, and once you kind of see it this way, you'll be able to do the other ones pretty easily too. And this should take you, an hour, not more than 2 hours to work your way through this. So we're going to take a look at it. Each one of these is an item in the strengths, and each one of these is in the opportunities is an item. So we're going to systematically compare strength number 1 against each of the opportunities to see what we might see. So when you do that, you say, I enjoy learning and quick to understand concepts, and now the opportunity is the Coaching 2020 program. So what can I do in order to learn quickly with enjoyment inside the coaching program if I'm Barry? What can I do to create those conditions for a favorable learning environment? So there might be 2 or 3 things that he puts in here, and then those become a list of things to do, right? And then he just goes all the way down through each one of these different opportunities, and then he goes to the second one. I'm a competent programmer and Excel user. What can I do to add value inside of here? And then you start building out a range of possible activities to populate box number 1. Well, this is now the next piece of guidance. So start with how do I get the big wins? That's strength on opportunities, right? And then work through each of those combinations and then take a break. And then share with your learning partners in the coaching group to see if there's things that they see that he doesn't see. That's why I shared that with you guys as well. And then by asking them for help, you can get out of your own fishbowl of your own perspective. Now, the next thing I want him to do is I want him to rate his strengths and the opportunities into three categories, A, B, or C, and then assign a value of 3 to an A, 2 to a B, and 1 to a C. Then when you look at pairing a strength that is an A strength against an opportunity that looks like it could be really powerful if you got the most value out of it, that's a 3 times a 3, so that has a potential payoff of 9R. Think of that as an R. So one of your great strengths, and then it's matched up with something that's in a great opportunity. All of the things in that category have a potential R value of 9. Similarly, at the other end, if you have something that you listed as a strength but is not really, doesn't feel like that much of a strength, or is that robust, and you have aligned it with something that looks like kind of a marginal opportunity, well, that's a 1 times a 1, and that would have an potential R value of 1. So when you go through that pairwise comparison, and you've identified all the things that you could do, you start racking those up by estimates of the potential R value, and then that should start leading you to figuring out the priorities. After he goes through that, we're going to then add some ideas about cost, time frames, and how to implement. But it really the priority is going to be informed by the biggest possible payoff. And then when he starts thinking about time, risks, and cost, he's going to think about those, and that will further develop the implementation plan once you start looking at how to implement. So when he's gone through all that piece of guidance, it's going to help produce a master priority list with time and cost forecasts, and then we'll simply use a Kanban style of production management. So Google up personal Kanban to show how that gets done. That'll be a separate briefing. But what you do is, after you've gone through each of those 4 categories now, 1 through 4, for strategies, and then assign this R value, what you've done is a really systematic and thorough brainstorming. And then you can have confidence that you have systematically, in a disciplined way, thought of all the possible things that might be done, and then started putting some implementation realities on it, time, cost, difficulty, risk, possible payoff. And now you're in the same position as a trader who has multiple entry signals, and you're trying to figure out which priorities. So that should be the combination of lowest risk, highest payoff, shortest time, and start getting those into your production mode and start building on those to create that irresistible momentum. Then you apply the principles of plan, prepare, execute, assess, and you learn from it, and you ratchet it up, and you lock in the winning positions and the habits and the rituals. And so you start working through your production list and your reinforcement list, and then you just start improving your daily trading practice. That's where that learning journal and daily accountability and accountability partners really is going to pay off here. I don't know of any other way to do it than this, guys. I mean, to be honest with you, if you want to be systematic and be around good times, bad times, like, I just want to say something about the past 10 days. While the rest of the world is melting down and suffering, that was the easiest trading for our style possible, because the moves are massive and directional and clear, and the warning signals were in there, and when those moves happen, they happen big, and there should have been a sense of clarity, peace, and calm in your mind to go through those. If it wasn't there, then we know we got some things to work on. But we live for that kind of intraday volatility and swing trade volatility. That's where you make your money as a trader, as opposed to a long-term buy and holder and position trader who has to just eat all that pain. I watch all the guys at work suffering as they're calculating all the losses in their retirement accounts, and I can't say a word to them because it would be wrong to do so. But the last 10 days have been massively good, and we're going to see that when we get into the portfolio speed run. So this is the guidance for coaching program people about how to go through that SWOT analysis to come up with your personalized list of what you should do next. And you have your accountability teams and partners to work with to help add a little bit of reality checks and critical thinking and mutual support and a learning environment that's safe to work on these things. So let's get that done. Okay. Next thing. So this is the notes from the master class. And so right from the earliest part of this morning, the first thing was I was showing the UVXY trades where I ended up adding to that position and then covering the entire position and then switching over to UDOW. And then the intraday transition from being short the market to being long the market, and then making an intraday shift to UDOW, the triple leverage Dow long, right around 9:30, and that's a 13% move intraday. So we're going to work through that. Here are links from Danny's. He did 5-hour trades in Walmart today. I want you to, if you didn't listen to the speed run and the strategy session yesterday, go back and listen to what I said near the end about Walmart being such a high priority payoff, and we're going to take a look at that trade. And Danny knocked it out of the park with the 5-hour win, and he was using the TC bundle to do that. And these are the two links to his video case study of that. You can either get it from Dropbox or from just register for free on the bundle site, and you can look at all the case studies that he's accumulating. We're going to start accumulating more and more TC 2000 bundle case studies from guys that are using it so you can see how to use that. That's the best way I know to wean yourself off of my daily reports and get into the toolbox yourself. And the price on that, I believe, is ridiculously low, and I'm thinking hard about the pricing on that by the end of this year. It's going up. I'm going to show you Eric's intraday frame on the Qs and why persistence pays off and how he got paid. And then this article from The Economist is sort of a reinforcement of the things that I've been saying over the last week about the effect of coronavirus long-term on global markets. And then we're going to review, finally, the shift to the Dow, the triple Dow. So first things first. That's not a good way to look at that thing. Hold on. Too small to see. All right, so this is the first one I want to show, and this is the trade case study on UDOW. So that it opened here. Let me get my my little pointer. All right, so this was yesterday's close, and then it gapped down, and then took off. So I had a swing position on this one already. I'd bought this last week at like 18, and was trading at turbo, and they kept a piece for swing. So it gapped down to about 22, and then took off and did a 1, 2, 3 entry. So I'm long here with a tight stop at the PSAR flip, and I'm ready to get out of this turbo position in the entire swing so I can lock in the gains. But I'm using markets money to fund this. It makes a gain, finds support at the VWAP and the PSAR. It takes off and gives an RLXD. I buy the second position. On the second leg up, it's rolling over. It's halfway to closing the gap. The RL270 is coming down, so I go ahead and take that exit and lock in the turbo. And then I see this little sideways quiet channel developing, and so I mark off the space between the PSAR flips in that yellow zone. And then if it breaks out of that box, I'm going to go long. If it breaks below that, I'm going to go short. If it breaks above yesterday's closing VWAP, I would add a second position long. Or if it broke below today's low, I would add the second position short. And now this is a case where it had gone from the winter, spring, summer, and then rolled over into the fall. So that felt like a natural place. What ended up happening is it gave this little bump, didn't break out further, sold off, cashed, and then later on we end up getting long in the UDOW because right around this time UDOW really starts taking off. But what I want to show you is that morning hook, and the first position on this much risk, the yellow box is the risk, it returned that much gain, so it gained a $1.20 on a 40-cent execution risk. So that's 3R execution risk, and this is about a 1R execution risk based on an entry with a stop below the belly of the dragon, which is never threatened. And then this is simply a P1 exit and the RL getting ready to cross through the dragon, and just, hey, enough is enough. All right. So that was the early trade in UDOW. I'm sorry, in UVXY, I should say. All right, so this one is important. This was the psychological state management of the day. So it started off, point number 1, in this yellow box right here. This is where I not only was trading UVXY, but I was covering all the remaining swing shorts that I had talked about from Friday. There were a number of positions, maybe 1 out of 5, that I carried over the weekend because I was really worried about that. That had gone so far so fast. That was a 10 sigma adverse move, worst 10% or the fastest 10% loss since the meltdown in 2008 and 9. And I felt sure with this president that there was going to be some kind of shenanigans, and so I wanted to lock it in while I could after a 10 sigma favorable move. So it gapped down and didn't sell off any further, so I took that as an opportunity to be zeroing out all of those other swing shorts and then try my little long shot here in UVXY, which was working during this time frame. And then by this time, UDOW, which is where we're looking at UDOW now, had a low, a higher low, another higher low, and then crossed its VWAP. And so this, in region 4, this is where I start shifting from being short the market to being long the market, and I pick UDOW because that is the symbol that had been smashed the most, and therefore is the one that's most likely to have been an overreaction. All right. So in block 2, I want to just say something important about psychology. So even though I had closed most of the shorts on Friday, I was experiencing a lot of stress over the weekend with the remaining positions. As I watched the weekend futures trading patterns suggest that there would be some strength today. Like there was no major meltdown in the rest of the world, and Asia started well and Europe started well. And I was thinking, man, I'm going to get smashed on those shorts in the morning. So when it at least gapped in my favor a little bit, but didn't sell off further, I just felt like, here's my chance to get out of those positions and to resolve all that stress. Even though I had reduced it to a manageable level, it was still a significant emotional sense of relief of getting out of there. But by the time I had cleared the deck, I was market neutral by the end of this yellow box, and now I'm ready to start again intraday first, no swing trades. And now I'm buying the cross of the VWAP, buying a second position when it clears the previous RL10 and this little Z3. So I buy that one, and then I want to make bank because now this is the adverse move. It comes down and just barely breaks the dragon, doesn't even get to the VWAP, so when it makes the RLXD again, I resume with one position. It takes out this previous Z3 and this hump of the 10. Second position, third position, starts to roll over, scratch the third one, but I make bank on those two. It comes down, doesn't fall all the way to the VWAP, but gives me an RLXD again, and I'm long here, and I want you to notice at 93. It closed at 99 today. So that's an 8% move up from here after two really nice trades in a series. So I'm happy with that one. So here is the afternoon trade now. So this was the one that closed from the one I just showed you, that entry around 93, closed around 95. Then I stop and reverse because it felt like the rest of the market was weakening. I get the one leg down. It gives me an RLXD before it gets to the VWAP, so I'm thinking long. I take a piece. I tried a second one. It just about scratched. Now the market feels like it's rolling over. The RL270 has rolled over, so I'm short on this owl entry short. It comes to the VWAP, finds support, so I cash the RLXD. I don't stop and reverse, but when I get a higher low, I take the continuation pattern. So I'm long. It doesn't fail. when it clears all of this crap, these previous Z3 excursions, I buy the second position, and then towards the afternoon, and as it starts making this run up here, I can't stick around any longer, and I get out of this thing at 99. So that was a massively good move. So now, and I'm holding nothing over the week or overnight, because that's just a one-day rebound. Let's just see what happens tomorrow. If there's any kind of strength rebound, I'm happy to do that. But now when we take a look at the sector performance today, UDOW was the big winner today, 13%. The triple leveraged S&P was 12.5. Tesla was 11. Apple was 9. Walmart was 7.5. Tech was 5.7. So yeah, nothing wrong with that, guys. Nothing wrong with that. So, let me see. This was a quick look at Eric's. I want to give him some feedback on this one. So Eric had done these measured moves with RLXD entries. He gets a 0.3, or not, a 0.5, a 0.6, almost 0.7, loses 0.7, gains, if you could see this, if I hadn't screwed that up. This is a 0.5, and then he gets a 1.3 gain. So he nets a couple R today by being persistent and staying with his rules and following the RLXD and the Dragon and the Four Seasons of MACD. So he did a nice job of that. You can see that in the chat room and on the Patreon. This is that Patreon thing right here. Okay, so that's that. I want to shift now very quickly to the speed run. So we're just going to start with Alcoa. And I want you to notice that in all of these cases where I've got the green dot, those were the ones that I closed on Friday. And then this was what we have, the gain, or the adverse move that we missed. So I closed Alcoa Friday after 2 short. I didn't play it long today. Apple I talked about is the short that got away, and now this massive move. What I should have been was buying it right here after it, because of that, it went so far beyond Z3, and everybody's got to own Apple. Now we're going to see that in Walmart and CAT I got that, but this is, I talked about this as an opportunity, but I didn't follow through because I was trading these other things and just got busy. But the move is still available all the way back up there. ARK is that AI ETF, and it recovered on Tesla's strength, but I still think that thing as a concept is broken. The Aussie dollar, I was glad that we covered last week, and it showed some rebound, but it's still in a downward move. It closed very weakly. I want you to notice just how weakly it closed today. So at the first sign of weakness, I'm going to be getting short inside the Aussie US dollar once more. Boeing was one where we cashed. We were ready to cash it. We had moved our stop down to here. It gapped open right here, sold off, and then as it started moving up, I just cashed a 2-bagger in Boeing, and it closed pretty strongly along with strength in the Dow. Caterpillar was one where we cashed it Friday. I thought really hard about this one because it gapped up above Friday's high and then closed really well. I had thought really hard about playing it, but I wasn't ready for that yet. I was too busy on the intraday and getting the market call right, but I think Caterpillar's one that I'm ready to get back into tomorrow. I was happy we closed Cliff, and it, like the material sector, was good, but not as good as CAT. Cut was brilliant, and that's one that I missed. This is one where, on a better day, this is where I should have entered. I'm ready to re-enter this one now, like right here, if it breaks out above that, and I would have my stop down here below the RL10. So that's what I'm going to be ready to do on Cut. Okay. So that's the trade pattern right there in Cut, here to here. I like that one so much that I'm ready to swing trade. That's the trade frame. Okay. And my target would be up here by the VWAP. I'm sorry, the PSAR flip. Diamonds, look how massive good that was, and that's why that UDOW move was so brilliant, which is 3 times leverage of that. Still plenty of room to go to get back to the Dragon and that, but there's more coming in that. Devon Energy, I was glad we covered that one Friday, And the energy sector rebounded pretty well today. I didn't play that one though. Emerging markets, I was really glad to have cashed that one Friday. It gapped up and then closed well, so the emerging markets did really well. EFA had the same basic thing. I'm glad we covered that one on Friday. We only had one position, but it was so good and outside Z3, I just was happy to take it. It opened well and closed better. Japan, that was one where we thought, I said yesterday, if you go back and listen, I said, of all the countries that could really suffer long-term in Asia from coronavirus, it's Japan, because they rely on exports and they're an aging population, and so they could really suffer. So we decided to keep that short, but it gapped up, and then when it went up through our measured exit, we went ahead and closed that one out. But that's a pretty good trade in Japan that I'm happy about. Mexico, we just covered. I didn't have time or attention to play that intraday, but that's one that's going to be a big follow-through tomorrow. And we'll start it with a hybrid frog. Same with Brazil. Was glad to have closed that 5 positions short on Friday, and thus I didn't take that 5 position hit on the gap up, and then it closed pretty well. So sometimes 5 birds in the hand is worth 1 more in the bush. Home Depot is one that I said, like McDonald's and Walmart, has been so strong that I was ready to play this trade, and it opened here and then moved out smartly, so went ahead and bought it at Z2, and I'm using Z3 as the stop, and my target is the middle of the dragon and the Bollinger Band mean way up here, so that's going to be a good swing. Russell is one I just said I think the adventurous guys are going to try it, so I'm long here with the stop at the Z3, and I'm going to at least aim for the top of the yellow box. Real estate I bought long today as a defensive play. I bought basically the RL10, the price, using Z3 as the stop and the low of the day, and I'm hoping to get to the Bollinger Band mean, so I'm long that on a swing. We covered coal, and it started cranking back up. There's just not much volatility in that one, so I'm just going to study that. McDonald's is one that, oh man, this was so nice. This is one where I bought the breakout, the return of Z3. So it had fallen way out of Z3 and then gapped up nicely, from the actually open where it closed. I'm sorry. So, but it never even threatened and then just took off. So I bought the Z3 and using the low of the day as the bottom of the execution risk for the swing. And so this is the trade we're in right now, and I'm hoping to get back to the long-term fair value. PBW is another one that I liked. It held up in the sell-off really well, and so I bought the RL10, which was yesterday's or Friday's high, and I'm using that the long-term fair value as the swing low, as the stop for execution, and I'm hoping to get to the hump of the dragon and maybe even up to the PSAR flip. Crude oil, we covered that one Friday. Was glad of it. The usual in the energy, SDOW. SPCE I bought as an alternative speculation to Tesla. And what I liked on that one was that Friday it had opened near its low and then closed really well. So I said I was ready to buy it if it broke out above the high. It gapped up, sold off quickly, and then started to resume. So when it started to resume and broke back above yesterday's high, I bought it at the mechanical entry and got a little bit of price improvement. But I'm holding that one simply as a speculative play, and I'm aiming for the return to the hump of the 10. Simon Property Group, that was one I kept the short on, but it opened well, and then we just took the exit where we had programmed it in case it wasn't failing further, and that's what happened. So we closed out a double position. That was nice. The triple leveraged S&P, we covered that one last Friday. And you can see it had a nice move, but not as good as the Dow. Treasuries, we closed today. So we had 3 positions long, and we had moved our stop up to here. It opened here, sold off, and so we just took the exit in the usual way. And really happy with that as a swing trade on defensive plays. The fact that it didn't follow through gives me some optimism for today, or for tomorrow, excuse me. Tesla is one that I bought SPCE, Virgin Galactic, instead, but I was really tempted to buy this one. And so if you bought that yellow entry there, I wouldn't be offended. Maybe you could have gotten even earlier, but the crossing of the Bollinger Band mean looks favorable to me. Dow was just massively good today. We saw that one already. Natural gas, we had no positions in it, and the whole, like coal, that the whole energy sector's made a turn. Oil, we covered the short today at the gap up opening. We were scheduled to we were still short, but we said if it got above Friday's high, we wouldn't. And when it opened there, we just cashed it. So a reasonable swing short. Really happy with that swing exit from last Friday that covered up here. And then you can see that it had a little run higher than Friday's close, but then sold off sharply as the markets rebounded broadly. Wiz, again, is cracked. Walmart was the big, this is Danny's 5R trade, and that's the one I said I would buy the Z3 resumption with a stop down here below, Z4. So we got this entry on a swing at 108, and it closed at 116. So we're 8% in the good, and I'm moving my stop up to here, and I'll add a second position if it breaks above the dragon skin. So Walmart for the win. It did almost better than Tesla, for crying out loud. Wheat and precious metals, that was the anomaly in the precious metals I didn't understand, and it started to play well today, so I just bought that as a defensive play right here above Friday's high with a stop below Z2 or Z1. So I'm just buying that on a swing, and these are the places I will add positions and hoping to get to the PSAR flip. Wind resorts we covered today in the usual way. U.S. Steel had a nice move up. I'm not ready to buy it yet. I still think the economic slowdown is affecting them, but long term I really love them. XLB, I was glad we covered that short on Friday. That was 3 positions short that we covered on Friday and then missed all that pain. So I think there's some room back in here. We covered energy on Friday, and it had a nice little turnaround. That's the same pattern you saw in natural gas, oil, and coal. But PBW is a better way to play that because it didn't fall as far and has some possibilities as an alternate energy. Financials is one that got away. This is one where I was really tempted to buy because it was a Z3 excursion completely beyond Z3, and you figure they're going to take care of themselves and the congressman they bought. And so I was really tempted to buy this breakout. I didn't because I had enough long side exposure by being focused on Dow, Walmart, McDonald's, and Home Depot. So, but financial sector is certainly one that you could take a look at. That's the speed run. I'm sorry. That was technology was good in there as well, and that was really the same pattern. I want to take a quick look now at the daily. You guys have been great about hanging in there. So here's the daily report real quick. So today's little rebound, let's see if I can. Yeah, so today, that's a shitty arrow. I gotta try to find a shape I can. I'll just use my cursor. You should be able to see it. So today's yellow zone trade was good. So you can see the 10 and 30-day range. So we recovered nicely. We're back to about a 10% sell-off from the swing high. We had flirted with almost an 18% sell-off. So we're back to just a 10% sell-off, and you can see the buy positions now above yesterday's high at the skin of the dragon, spine of the dragon, fair value, Bollinger Band mean, PSAR flip, Z1, and the hump of the dragon and the RL10, so that's all the way back up to the top. But we're definitely in the winter, so I have a short bias. That's why I carried very little overnight and only those things that paid for themselves with those massive intraday moves. All of the overnight holding was 20% of the intraday position size. So that was all paid for with markets money from Turbo. Okay, so we're back to sideways volatile that favors short-term trading without a directional bias. We got down to Z-3 in the risk Z. You can see the 10-day max pains. All of the auto framers are going to be amazing. But really, this is about short-term trading with hybrid frogs and frog champions, and knowing your frog box and your minimum manageable risk box, and get the market call correct. Start with those things like the Russell, the Dow, the VIX, Brazil and Mexico, and then follow through with McDonald's, Walmart, Home Depot, and maybe the financial sector or XLK, and that's going to be good for you, honest. And that's where I would be focusing my effort the rest of this week until we get back out of the sideways volatile conditions. That's the dominant strategy the whole week, and my plan is to do this at 8 o'clock CST every day of the week, or as long as we're in the sideways volatile, so we can kind of get a really focused effort on the things that are working in the short term. I want you to notice who the big winners and losers today were. So the symbols that were in green in the Dow were the big percent winners. So that's Microsoft, United Health, Apple, Travelers, and Walmart, for crying out loud. Big losers: Dow, Disney, United Tech, Cat, and 3M. In the ETF 30, silver, oil, exploration, Asia less Japan, gold, and treasuries were the big losers. Dow was so good it wasn't even close. So how much more do you need than the safety but volatility of the Dow? Holy smokes. Notice all the massive Z-score adverse moves. Even the best ones, the positive Z-stretches, are all in the bottom half of the river. So that should tell you something. And then all of the auto framers were giving you some massive reward to risks to the 10-day high. I think it's premature to be thinking about that as a swing trade. Like I said, start with intraday and hybrid frogs and use markets money for things that close really well. But use the hybrid frog to be directionally neutral in the morning and take the direction that price wants to take you. Trust the price and read the machine, or read the leaves, and so forth. No squeezes because of the massive volatility. Everything's in the winter. So that should just tell you about being premature about being swing trading. But today's little gains actually brought things out of the red and into the yellow on the 10-day look back. That's the magnitude of this. This is abnormal times, guys. We're at Z minus 2 on the slope stat. So normal rules do not apply. Invoke the special rules for when you have these kinds of massive sell-offs, and take advantage of that short-term volatility to get strong signals and big moves in the big market movers. So that's everything I want to cover tonight. You've been great about hanging in there. So that's 35 minutes. Went a little longer than I wanted to, but I felt like these were things I wanted you to hear. So pending any questions, that's all I got for you tonight. Thanks for hanging in there. Send me your questions, and we'll get on with the work. Okay. So I think you can download the daily reports right from in here, I believe, and then also from the Patreon. Hey, so here's what I want to do. I'm thinking hard about this one for the between now and the annual annual boot camp and live trading. I'm thinking of doing a focused digital online workshop for the 37 strategies, where I present a lesson on each one of those, give that to you to study. You sign up for the workshop, send me your questions, and then the follow-up one we do in a live session with recordings where I'm responding to your very specific questions. This is a chance to kind of do like focus coaching and whatnot. So I'm thinking about a distance learning home study workshop somewhere probably in the $1,000 range for folks. Unless you're in the coaching program, I'll probably just give it to you, or maybe half price or something. But I want to get something like that going, because I believe that's the way to do it. Why should we be paying airline tickets? Let's save that money and then buy the workshop and do it online and produce that and make it available that way. So expect more ideas in that. Let me know if you're interested, and we'll get it sorted out at some reasonable price point. So anyway, take good care, guys, and we'll see you in the chat room. Be ready to get them tomorrow.